Hello and welcome. You're watching Mint and I'm Sana Marvaha. After the US attacked Tehran's key nuclear sites, the world has been bracing for Iran's response. One of these is that they closed the Strait of Hormuz, and everyone has been discussing the possibility of this for a few days now. But now Iran has formally voted to close this waterway, and this is a crucial kind of choke point through which 20% of the world's oil is transported. So, what was speculation until now has become a very real threat. So, how will Iran's next course of action impact global oil supply, global markets, and global economics? To understand this, we are joined by Mr. Peter McGuire. He's CEO, AustraliaTrading.com. He's been writing and speaking a lot about the oil market and the impact of the war. Hi, Mr. McGuire. Thank you so much for joining us here on Mint today.
Good afternoon, Sana. Nice to be here.
All right. Well, first of all, what has been the immediate impact of the escalation of the war after America struck Iran?
Well, I think a couple of things. First off, I think it took the market by surprise. Certainly, it happened over a weekend. You've seen a fairly strong move to the upside over the last matter of days as far as oil prices, and they were up at one stage today nearly 5%. They've given up some of those gains, but we're still, $74 a barrel for West Texas Intermediate and $77 for Brent.
Right. And as per you, what do you think happens to oil prices from here? Do you think the markets have priced it in, or how does that affect the rest of the economy? And how does it affect our pockets in case oil prices rise? There have, of course, been some estimates saying that it crosses $120 per barrel.
Well, I think some of the major points at the moment are there's multiple scenarios that can get actioned. One is if there's no retaliation from Iran, then one would think that this whole matter would just die a peaceful death over the next matter of days. That would be, I think, I'm not suggesting that's going to happen, but that would be option A or scenario A. Scenario B naturally is going to be choke point, as you mentioned, Strait of Hormuz, limiting ships that can sail through there with oil. 20%, 30%, 25% of the world's oil travels through there. The next part is retaliation from Iran into Israel. And then how does that impact naturally shipping? What happens as far as geopolitics? Does it drag America back in? What happens to the likes of the Houthis? And remembering you've got the Strait, Bab al-Mandeb leading into the Red Sea. So there's so many different components to all of this framework that need to be, I think, lived through so we get a clear indication what goes on as far as price and geopolitics.
All right. So, presuming that Iran does carry out their threat and shut the strait because they have already formally voted on it,
Yes.
how real is the possibility that they can actually ensure that no ships kind of travel through there? Because it's a small strait, of course, but there are many players involved. It's not just Iran, there is Saudi, etc. So, how
Absolutely.
real is the possibility that they actually can close it?
Well, this is going to be a great, I'm not sure whether they would be successful. And the reason I say that would be, I think that the US would certainly have ships in there very, very quickly. And I'm sure that they wouldn't be too far away. They'd probably be in the Persian Gulf or in that region now and making their way to that area. Secondly, what's going to happen to the likes of Saudi, airspace, and how are they going to shut it off? Because you've got Qatar there, you've got the UAE, you've got naturally Oman, and then, Saudi are a little bit further away. But that whole, and Kuwait at the end of the Gulf, that the whole framework of just saying we're going to shut it off is going to be one that's maybe not going to be that successful, or it's going to be very difficult to actually achieve that strategy. And these are all, it's easy to, I think, suggest something, but I think it's going to be a very difficult piece of action to take place. I'm not suggesting it won't happen, but I think it's going to be some pushback, and especially if the US is involved, there'll be significant pushback.
Right. And also coming on to a related thing, which country or region will have the worst impact if Iran does shut the strait? Because I was reading that it actually may not impact Israel itself much, but it will impact Europe and countries in Asia like China, which imports nearly half of their oil through the strait. So could you throw some light on that? Is Iran going to end up kind of punishing the wrong guys?
Well, to some extent, and I understand the framework of what you're mentioning. I mean, yes, I don't think Israel's going to have much impact because they sit on the other side at the Med. And as far as oil consumption and where they'll be able to buy oil from, I think there's plenty of oil. The other that side of the world, if you're looking at where Iranian oil gets shipped to, we understand that as far as, a large percentage does go to China and to Asia. So there's going to be, again, issues there as far as distribution. Are those ships being able to get the actual oil into, those particular countries? I know that they've just opened up a new train system as far as a line all the way from Iran through the Silk Road and into China. That's going to be very advantageous for China. But yes, I think there's going to be many components of this play out over the next matter of weeks if it was to drag on, and the impact that's going to have to consumption and naturally price sensitivity.
Right. And can you throw some light on exactly how this would impact the US as well? Because they, of course, import oil from Saudi, which also does run through this strait. So,
Yeah.
could you like kind of quantify the impact on, say, Europe versus America?
I think Europe's going to have far more problems than America. President Trump has got quite good supply in America. He's got strategic reserves, and Europe may have more issues to deal with as far as a footprint. Who's going to have more, I suppose, vulnerability? Whereas the States, large consumer, large producer of oil, they produce about 22, 23 million barrels a day. So I think that they will look at increasing their production quickly. And again, how long does this last for? Is it a short-lived situation, or are we still talking in a month's time and we're looking at oil at $100 a barrel and saying this is not working out the way that we thought it would work out? You've also got the impact that leads to inflation, and naturally, with the situation with tariffs and so on, it creates a lot of angst to major trading partners and global economy.
Right, absolutely. So, okay, if we shift focus back to commodity markets now,
Yeah.
what about gold? It has, of course, risen. It is a safe haven asset. Do you think it will surge now that the situation seems to be more volatile? Because I believe the consensus was that, it's kind of reaching its peak, but now that the situation has worsened.
Sure. I mean, it's given up some of that hot air, and it's back at $3,380. So it's it's very close to 3,400 and striking range of its all-time high. US dollar index, the US dollar has strengthened quite considerably over the last, I suppose, 12 hours, and it's been bid up. So I wouldn't be surprised for the US dollar to regain some more strength to the upside. As far as gold's concerned, if this was to see some major retaliatory action from the likes of Iran and things really turn into a powder keg and create a lot of, just bad economic situations and wartime, then I'm sure that gold will be a safe haven. And I'm very sure that it'll probably take its all-time high out and significantly rise from here.
All right, and I have one last question for you. If we talk about the
Yes.
US market, where does the war with Iran kind of place the US if you look at like their debt ceiling, debt crisis, and their bond market? Do you think it's going to have any impact? Because, I mean, Trump kind of came to power on the plank that, he's going to reduce the wars and hence reduce the expenditure, etc. But now
Yeah.
they are pretty much involved in the war in the Middle East.
Well, yes, it depends again on how long. I wouldn't be surprised for bond yields to spike from here. So there's the first part. So yes, possibly I'd keep an eye out for, say, 4.5% for the 10-year. And if it goes through that, then maybe you're looking at a little bit higher. It's just a work in progress to see how long it rolls. I want to keep an eye very closely on US equities and US dollar. And the overall situation as far as debt ceiling, well, there are certain constraints there, but I'm sure that in a time like this, I don't think that Congress would sit on their hands. They'd certainly look at supporting President Trump, and that would be the short answer to that one.
All right. Well, thank you so much for joining us here today.
Thank you, Sana.